Welcome to Tracking Stocks, the channel where we implement proven trading systems from the most successful market tacticians in history. Today, we're breaking down one of the most powerful investing frameworks ever created, the CANSLIM method by William J. O'Neill. It's a blueprint built from over 125 years of market data and more than 1,000 of the greatest winning stocks, from the railroads of the 1800s to the tech giants of today. Every major winner, Apple, Tesla, Nvidia, Amazon, displayed the same 7 signs before their biggest runs. In this video, we'll go step by step through those 7 letters, explain how to read the charts behind them, and show you how to think like the institutions that truly move markets. So grab your notebook, and let's decode the system that changed how serious investors trade, the CANSLIM method. CANSLIM isn't theory, it's evidence. O'Neill and his team at Investors Business Daily studied every major market winner going back to the 1880s. They built model books, literal collections of charts, quarterly reports, and price patterns. And what they found was stunning. The same behavior kept repeating. The conclusion was simple. Successful stocks leave footprints before they make history. Each letter in CANSLIM represents one of those footprints, a blend of fundamentals, technicals, and psychology. C. Current quarterly earnings. Every great run starts with explosive earnings growth. Not opinions, not hype, numbers. Look for quarterly EPS up 25% or more year over year, ideally 50, 100, even 200%. Pair that with sales growth of at least 25%. In 1982, Home Depot posted 4 straight quarters of triple-digit earnings growth before its 10-fold rally. Accelerating profits signal that demand, margins, or efficiency have shifted, and institutions notice before the public ever does. Price follows institutional buying, never the other way around. So C stands for one thing above all: current quarterly earnings. A. Annual earnings growth. Strong quarters are great, but strong years prove it. The A filters out one-hit wonders. Look for 3 consecutive years of annual EPS growth greater than or equal to 25% and return on equity above 17%. Great companies scale profitably. Microsoft in the 1990s, Nvidia through the AI boom, Apple across a decade of iPhones. O'Neill found that almost every big winner doubled or tripled profits 3 years in a row before breaking out. Consistency builds confidence, and confidence attracts institutional capital. N. New products, new management, or new highs. N is the spark. The market craves new. Apple had the iPhone, Tesla the Model 3, Netflix streaming, Palantir AI contracts. But new doesn't just mean innovation. It can mean a new CEO, a new industry cycle, even a new price high. Investors fear new highs. Professionals embrace them. A breakout into uncharted territory, backed by volume, is confirmation, not risk. When you see a stock hitting record levels on rising volume, pause and ask, what does the market know that the crowd doesn't yet? S. Supply and demand. The stock market is an auction, ruled by supply and demand. Less supply, more demand, rising prices. A company with 30 million shares can double faster than one with 3 billion. Watch for volume surges 40 to 50% above average on breakouts. That's not Reddit noise, that's institutions. In 2020, Zoom's low float met massive volume, and price exploded. These patterns keep repeating because human nature doesn't change. Fear and greed still run the show. The charts just make it visible. L. Leader or laggard. L. Separates winners from wishful thinking. Professionals buy leaders, not bargains. Look for relative strength ratings above 80, ideally 90 plus. Leaders pull the market up. Laggards get dragged behind. When AI boomed, Nvidia and AMD led. Intel didn't. When retail soared, Home Depot and the limited stores led, not Sears. The market rewards the best, not the cheapest. Ask yourself, Am I chasing weakness or riding with strength? I. Institutional sponsorship. I stands for institutional sponsorship, the invisible engine behind every major move. Mutual funds, pensions, hedge funds, they control the volume. When they start accumulating quietly, price rises before headlines. Look for ownership increasing quarter after quarter. Not too many funds, but the right ones. Tools like 13F filings reveal their footprints. And when company executives own significant stock, that's a bonus. Skin in the game changes behavior. Institutions create demand. Retail reacts to it. Follow their trail, not their tweets. M. Market direction. The final letter, and the most critical, is M for market direction. Even the best stock fails in a bear market. 3 out of 4 stocks move with the trend. That's why O'Neill defined the follow-through day, a major index surging on volume after a correction, signaling a new uptrend. And the opposite, distribution days, warn that institutions are selling. In 2000, CANSLIM traders sidestepped the dot-com crash by listening to those signals. The market always speaks first. Our job is to listen. Trade with the trend, never against it. CANSLIM is more than math. It's psychology. Every chart pattern is a story of emotion, fear, hope, greed, regret, looping through time. The cup with handle, double bottom, flat base, even the high tight flag. They all reveal institutional accumulation and shakeouts. During a base, strong hands buy quietly. During the handle, weak hands get flushed out. Then comes the breakout, explosive volume, and the crowd finally notices. Same drama, different tickers. Every decade, every system fails without discipline. The golden rule of CANSLIM: cut losses quickly. Never let a loss exceed 7 to 8% below your entry. Small losses are tuition. Large losses are career-ending. Professionals take their cuts early. Amateurs wait for hope. Hope is not a strategy. Protect your capital, and you'll always have a chance to win again. And that's the CANSLIM method. 7 letters, 1 timeless system. It works because human nature never changes. In future videos, we'll show you how to apply CANSLIM in practice, identifying follow-through days, building watch lists, and analyzing live setups as they form. So stay tuned, subscribe, and turn on notifications, because the next episode will take you from understanding CANSLIM to using it like a pro. This is Tracking Stocks, where we turn proven trading systems into real-world results. See you in the next video.